Motor Traders Association of New South Wales is really proud to be hosting today's webinar sessions with some important information being explained and presented by our keynote speakers from icare and Motor Trades Care, formerly known as MTC. From those of you that are not familiar with Motor Traders Association of New South Wales and formerly known as the MTA, just a little bit of background just to lead into that. The MTA was founded back in 1910 and currently celebrating 110 years this year. MTA New South Wales core function as an employers association and a registered training organisation dedicated to representing businesses in the automotive industry, along with a number of specialist supports for members. And just I'll briefly suggest on a couple, such as legal counsel, employment relations, work health and safety, compliance, Australian consumer law advice, training of our apprentices and trainees, and most importantly, the key representations is to government, such as lobbying for industry, both on a state and a federal level. As you may or may not be aware, MTA New South Wales has been involved as a key stakeholder in a newly formed partnership or an alliance with both the MTC and icare since the beginning of 2019. And as part of that commitment to the industry-led approach to driving change, particularly in work health and safety and workers' insurance or workers' compensation, today we'll assist small, medium, large automotive businesses across New South Wales better understand what we consider as an important information, but is often overlooked on how to best navigate workers' insurance and premium policy renewals. And so on that note, I'd like to introduce two industry experts within their fields that have offered their valuable time to present some key information and hopefully clarify and answer the questions for our MTA members and any other guests that have joined us here today. So firstly, to introduce Peter Meighan, joins us from icare. Peter's currently the Underwriting Operations Manager. Peter has almost 20 years experience in insurance industry, working across a number of areas as well as customer and operational roles in insurance, broker, scheme, agent environments. So welcome, Peter.
Thanks, Mark.
Secondly, Trevor Ballantyne joins us today from the Motor Trades Care or MTC. Trevor is the General Manager of Work Health and Safety. Trevor has over 20 years experience, also specialising in work health and safety, return to work, in several industries, including the motor trade. So he was the National Safety and Wellbeing Manager for Kmart Tyre and Auto Service, and recently as a General Manager of the Group Safety of Wellbeing and Environment at the NRMA. So welcome, Trevor.
Thank you, Mark.
I'd like to hand over firstly to Peter Meighan, and basically we'll be taking questions after each topic. And then we'll have enough time at the end if there was any other further questions at the end. So handing over to you, Peter. Thank you.
Thanks, Mark. A little bit about myself. As Mark said, I'm the Underwriting Operations Manager for the Workers' Comp Underwriting section of icare. icare has been around now since about 2015. Some of you, if not all of you, would have had some experience with work cover. In 2015, the decision was made to split work cover into its two separate arms. So one, the insurance arm, which is icare, Insurance and Care for New South Wales, which is where I'm from, and then also CIRA, the State Insurance Regulatory Authority. So essentially splitting the insurer and the regulatory arms. So we look after the insurance, not just for workers' comp in New South Wales, but a number of the assets, etc., for our business, or for our state, sorry. And at the moment, as far as the motor trades industries go, we've got to touch over 10,000 employers that we insure through icare, a little bit over 100 million in gross written premium. So my remit, I guess, and what my scope of responsibility is ensuring that our customers receive their documentation on time, that it's correct, and that we can support you and Trevor and Mark in your dealings with icare.
As Mark mentioned, Motor Trades Care, we're a specialist automotive industry, work health and safety and workers' compensation consulting business. And over the last 12 months, or just over, we've been working very closely with the MTA and icare to bring to life a range of initiatives and services to support the automotive industry with their workplace safety and to care for their injured employees. Greater engagement and information sharing is certainly one of those initiatives that we've been looking at, which has led us to this inaugural webinar, which we're expecting to have quite a few more of these over the coming 18 months. So just moving on to the topic of the day, as you are all probably aware that it's compulsory in New South Wales for almost or the majority of employers to have workers' insurance. We used to call it workers' compensation. We now refer to it as workers' insurance. But there are only a small number of employers in New South Wales that are exempt, and that's largely related to the quantum of your wages that you pay. But for the purpose of this session, I would expect that people participating or joining us all have a policy in place. So policies generally run for a 12-month period, starting from the date that your business takes out the policy. However, generally the renewal processes are aligned with your financial year or tax year. As we mentioned, it's coming up to the end of the financial year and renewals are underway, so this is a perfect opportunity to bring you this webinar and share a bit more information about how you can best go about dealing with your renewals. Workers' compensation premiums, as well as the scheme as a whole, can be quite complex and can be quite challenging to navigate for many people. And when we go through circumstances like we have with the COVID-19 pandemic, it becomes even more challenging. There's more impacts and these types of things, such as the JobKeeper program, has to be incorporated into the considerations around premiums and renewals and how that impacts your business in its current form. So Pete, most people were interested in the topic around COVID-19, the impact of COVID-19 on 2020-2021 premium calculations, and what icare is doing to support business in this regard. So over to you.
As soon as COVID hit, I'll sort of just go back to the beginning, if you will. As soon as COVID hit and we realised that we're going into lockdown, we started putting some things in place to help our customers and the business of New South Wales sort of traverse, I guess, the great unknown, and until we were in a bit of a better position to understand it. So initially, we certainly made aware straight away that customers could contact us and reduce their wages if they needed to, and we still maintain that now. So if you do need your wages, you do want to revise your wages, because as Trevor said, most policies renew 30 June to 30 June, but there are a proportion that don't. So it is still absolutely relevant that you look at your wages in that respect. So we reduce wages where applicable, and to that end, so far, we've reduced the wages and assisted customers of about 14,000 policies and reduced about $77 million in premium already as far as that goes. We also made the decision, because of the economic environment, everything that was going on in COVID, that we would maintain our premium rates for 2021. So there'll be no premium rate changes. We'll maintain them where they are for 1920. So you've got that extra 12 months, I guess, degree of certainty around what your premium will look like, what those rates will be. They're on hold. We'll maintain those rates, as I said, and that was probably the next thing we did. I will call out that as things come up, we are in continued conversations with CIRA, our regulator, to understand what their views are, understand where they're going, and provide our input from the conversations with our customers, industry bodies, etc., so that they really do have a picture of the whole scheme, I guess, and the views that are needed. So those conversations are ongoing. That included conversations about the JobKeeper allowance. You can imagine that straight away, as soon as JobKeeper was announced, we received a number of requests and questions around how JobKeeper would impact on your premium. To that end, and we might touch on it a little bit later, but to that end, most of you who have either who are renewed 30 June or even now in July, you will receive either as part of your renewal pack or under a separate email, a little COVID flyer that will tell you some of the options open to you around reducing wages, around deferring premiums, etc., which I'll touch on in a sec. But the other thing we did was work very closely with CIRA to understand how JobKeeper would be treated when it comes to actual wage declarations or wages declarations. Up on our website in that flyer, it will state that the allowance would only be included for workers that are working. So if you're in, we call it hibernation, but if you've had to stand workers down, pause your business, etc., but you are paying them the JobKeeper allowance, the only component that you would need to declare to us for premium perspective is that for when they are working, which is another big win, I think, for our customers and for the businesses of New South Wales. We're also happy to have a conversation with our customers that are under a little bit of financial strain. To that end, we've deferred premium up to about $45 million across a large number of our customers. Again, that just involves you giving us a call, 13 44 22, and we'll have that conversation with you. I'll call out deferring is different to waiving premium. We haven't waived any premium. We're certainly just deferring payments to make it a little bit easier for our customers to maintain their business and to get back on their feet once things slowly return to normal. They're probably the key call outs, Trevor. Certainly, as I stated, we're always available on 13 44 22 for those conversations. However, each, as you mentioned a little bit earlier, each policy and each customer is specific to their own circumstances. So broadly, what I've spoken about will work, but we'll absolutely have those conversations individually if needed.
Two key things there. One is rates on hold, which means basically unless you've got a significant fluctuation in your wages, either up or down, that your premium should stay relatively stable. And then secondly, around the JobKeeper payments, what you're saying is that if, for example, an employee is receiving $1,500 a week on JobKeeper, but they're only working the equivalent of $1,000 a week, only the $1,000 will be applied to that wage number in the premium.
Yeah, that's correct. Absolutely right. Yeah, so they just need to declare that when they let us know. The other thing that people will may have noticed as they get their renewal packs is in the past, when we send you information, and we might touch on this a little bit later as well, but I'll raise it now because it's COVID related. We would normally increase your wages by CPI, roughly 2%, etc. We're not doing that this year either. So we'll maintain your wages as you have estimated them for the last policy period. And also, if you have contacted us, you've been one of the employers that have contacted us and reduced your wages because of COVID, they're the wages we'll use for this year's renewal as well. So again, just trying to understand where you're at, understand how you're impacted and maintain that as much as possible. Doesn't mean we can't change them if you want us to. Absolutely we can, but that's what we'll do. And even if you've called us for your June 30 renewals, even if you'd called us in April, they're the figures we would have used up until the last possible minute. So
people they've already received the renewal packs. What do they need? What's in those packs? What do they need to look out for? And what's the call to action in terms of making sure that the process through to completion reflects their current circumstances?
Okay, so for small employers, Trevor, I'll call it 2 policy periods ago, 2 years ago, we moved to what we call a single renewal pack. So try to align the experience anyway with what we get when we get our car insurance, we get our house insurance, etc. So the small employers will get what we call our single renewal pack. That comes out about 45 days, give or take a day or two, before your renewal date. That single renewal pack will have a cover letter. It'll have usual sort of insurance documents, statement of product, terms and conditions, premium definitions. It's got a return to work poster in there, which is really important for you. That'll have some information about icare, but also a space for you to put in there the details around your claims agent who manages your claims. That needs to be put up somewhere around the worksite so that everybody can see that. It also has your invoice, which will, as I said before, will reflect your wages that we've used to estimate your premium. It'll include your premium information pack, which will just step through the different components of your premium, including your total premium, etc. There's also an actual wage declaration in there. So you've got 4 months to get that back to us so that we can just make sure that your premium for the prior period accurately reflects the wages you've paid in that 12-month period. That might mean you get a refund if it's a bit less. It might mean you get a little bit of an extra premium if the wages are a little bit more than were declared for your renewal premium. And at the moment, as I mentioned before, for those of you that receive your post in the mail, you'll also get a COVID flyer in there, which will just, again, reinforce some of the information around JobKeeper. Also, some of the options open to you around deferral of premium if you need to, etc., along with our contact details. For those of you that get your premium pack via email, you should have received that via a separate email. I know, as I mentioned at the start, we've just today, last night and today, started to send out the single renewal packs for our July renewals. So you will probably get your renewal pack any time over the next couple of days, and then a COVID flyer under a separate email not long after that. Things, I guess, to look out for in that single renewal pack. Well, I'll go back a step. Assuming nothing changes, your premium will just renew. So if you don't contact us, your premium will renew, and you'll just use that invoice that you've received to then maintain your payments, whether it's in full or via instalments. And those options are set out there. I'll touch on those in a sec. So very much like, as I said, your car insurance or your house insurance, you check all your details, you agree with it, you pay the invoice when it's due. A couple of things to check out or to think about when you do get that renewal pack. Sounds really simple, but it's probably our biggest, I guess, area that we work with our customers on, is just check the details. Check, and the basic stuff as well, that your name's on there, the business name's on there, that the ABN's on there. All of that's set out on your certificate of currency, which I didn't actually mention before, is in that pack as well. Look at your certificate of currency. It'll have all those details on there for you. It will also have your wages and your number of employees and your business activity. With your wages and your number of employees, at that period of time, they're estimates. So if they're not going to change significantly from that, you're still covered, all your workers are covered. Only contact us if it's going to make a really significant difference to your premium. If you're worried about it at all, by all means call us, but really it's there as a guide for you and your business and for us to calculate your estimated premium. Your business activity, absolutely check. Make sure it reflects what you do and what your workers do. And if you've got any concerns or you think you've changed your business, and in COVID-19, we've had a number of those where the customers have moved away from one particular, mainly in hospitality, but one main hospitality activity and moved to a slightly different one. So we've had to have some conversations about them. So those three things are probably the key differences or details for you to check, and then let us know if any of those change.
Just with the industry code or the industry description, why is it so important to check that?
So the industry code reflects your business, but then as of that, it also reflects the risk of your business. So, for example, some rates are much higher than others because they're inherently more of a risky business, whether it's just higher manual labour, you're in a slightly riskier situation. So for us to get that right, and the flow and effect of that is, if our customers are accurately reflecting their risk, then the scheme is accurately reflecting the risk, and therefore make sure that the premiums we charge are correct, and that it actually reflects what's going on in the scheme. So it's a good question, Trevor, and something that the conversations we have with our customers all the time are ensuring. Some of the questions we ask, I think people look at us and go, really, do you need to know that? But yeah, we do. We need to understand what the business is. We need to understand what you do, so that we can make sure that the scheme is sustainable, and provide some consistency around premiums. So I think the other key call out for me is your invoice, not just because it's got your premium payment details on there, but for some of you, you can pay in full and you receive a discount, and that's outlined on that invoice. At the moment, for small employers, that's a 5% discount. But you've also got options depending on what your premium level is, to pay via instalments. So if your premium is over $1,000, depending on how big it is, you could pay either quarterly or monthly instalments. There's no extra charge for that. It doesn't add to your premium or anything like that. It simply will split your premium into 12 or 12 instalments or 4 instalments. Again, you can contact us and just let us know that if you want to change. You're not bound by that because last year you paid in full and this year you want to pay in instalments or vice versa. You just need to let us know. Your premium pack should reflect your last year's option, whatever you chose last year. but you can always call us and change that, and we'll work with you in that space. That's not a problem. I think probably just about covers what you can expect to see in the single renewal pack. As I said, assuming you don't contact us and make any changes, that will just flow through. We'll renew your premium, and then trust that you'll make the payments as set out in your instalment schedule or your invoice. If you do contact us, we do make changes. You'll get a new pack that says here's your new details, etc. So even if it's after the renewal date, you've still got a window of opportunity to contact us and make some changes, but it's infinitely easier for your records and us if we do that before you renew. You get a nice clean pack, up-to-date details, easy for everybody to manage.
So just in terms of the information and call to action there, I suppose it's great to see icare supporting business by making the instalments payments available if it's above $1,000. I suppose something that everybody just needs to be aware of is that it does have an impact on your ability to get the 5% discount. So if you do go to the instalment payments and not paying that full amount up front, you won't get a 5% discount. And then I suppose the other thing would be is that if you haven't contacted icare around your wage changes, basically because of COVID-19, you need to be aware of the value that's on there, because it can have a significant impact on what your premium may look like next year. So I think that's probably one of the key things there, Pete.
Yep.
And then I suppose if people want to make those changes straight away, what is the best way? What is the preference and the best way for them to get that done?
Call us on 13 44 22. It's the easiest and the quickest way to do it. We absolutely strive to resolve our customers' queries straight away on the spot, and for most of those and for most of the customers that are on the webinar with us now, we should be able to do that for you straight away over the phone. 13 44 22. It's actually open from 7 a.m. to 7 p.m. Because we understand that for small businesses, especially, that you don't have the time during the day. You've got enough on your plates between 8:30 and 5:30 or whatever your hours might be to worry about things like your paperwork, etc. So 7 a.m. to 7 p.m, 5 days a week, you'll be able to get hold of us, and we'll be able to, as I said, resolve most of those inquiries on the spot. If not, if it is a little bit more technical detail, you need an underwriter, then we can transfer you or ensure that somebody gives you a call back. But for most of it, that's the number to call us on. Excellent.
And just one more, sorry for me. In terms of going forward, the preferred choice or the quickest and easiest way to move for people to move through this renewal process, would that be by arranging your renewal packs to come to you via email rather than in sort of post mail?
Yeah, email correspondence we always prefer. Not just I guess because of the impact on the environment and paper, etc., but it ensures that you'll get it next day. We can turn everything around much quicker. It's a little bit easier for you to see the information. So the other thing that we'll move towards an improvement and stuff like that around our documentation is just streamlining that a little bit better. So it's a little bit way off yet, but we're definitely looking at things like hyperlinks rather than attachments, etc. But yeah, our preference is absolutely email, making sure that email address is up to date and the contact is relevant. Then you get the documentation. As I said, even if we were to make a change for you today, you would have that documentation tomorrow at the latest, rather than waiting for Australia Post's current, I guess, postal deadlines and schedule. So yeah, email's the way to go. Sure.
Okay, excellent. Thanks, Pete. All right. So just remind everybody, if you've got any questions about your the renewal packs or the renewal process and what Pete's just information Pete's just given you, please put in a question. I've got one here, Pete. I actually might. It's a long question. It might be very specific to individuals, but I think there'll be a number of people that might have found themselves in this situation. So I'll just give you the basics and maybe you can give an answer. So what we have here is an employer that when the COVID-19 pandemic kicked off, they made contact with icare to adjust their forecast on their wages, thinking that there would be wage shrinkage and they would have to go down the JobKeeper path. But as it turned out, their business revenue only shrunk by 22%, which meant that they actually maintained the wage levels that they had prior to COVID-19, and they didn't pursue the JobKeeper program. So what impact will that have now on that premium that was adjusted when they first rang in?
Well, I'm assuming we reduced the wages, which would have reduced your premium a little bit. So yeah, there will be a difference when you provide your actual wages, for sure. There's a very much flat out response to that, which is depending on the extra premium that it would result in, you would get 3 installments to pay that difference anyway. So you'd have a chance to defer it somewhat. But otherwise, if it was still an issue, etc., you'd probably just need to call us and have the conversation around what it meant for your premium and how we might be able to. It's probably a little bit too specific for me to give general answers, but I will call out that if your wages do increase, and look, we have had customers who have actually said my wages have increased because of COVID or because of some changes we've made, then that extra premium, you do have the opportunity to pay by installments anyway. You get 3 installments to pay depending on the amount. You're what we call your adjustment premium. So, but in that particular circumstance, it's best to probably contact us and have the conversation.
Perfect. Thank you. All right. And then we've got one here from Nathan. Nathan just wanted to clarify that the actual wage declaration comes with the renewal pack.
Yeah, absolutely. If you do lose it, though, that's up on our website as well. We've just made a bit of an update to that one too, to make it a little bit easier for customers. So if you do go onto the website and use the form that's on the website, you can now just complete it all online and submit it via email straight away. So it'll attach an email. You get you'll get a confirmation of receipt, etc. I'll call out that at the moment, actual wage declaration turnaround is not too bad, but your peak period, you might see a little bit of a longer wait. But again, just give us a call if you've got any questions or anything like that. But yeah, absolutely, you'll get a form with your pack, or else you can download it off the website.
Excellent. Thank you. So one more call out. Somebody said they 100% prefer communication by email. So just for the audience there, if you have received by post mail and you do want to receive all future correspondence in regards to premium renewals via email, please get in contact with icare and they can make those arrangements straight away for you.
Yep, absolutely. Just give us a call and we'll make that change straight away. That's easy.
So the last topic there was just about premium calculations. So can you just give a really high level summary of the premium calculation and what you consider when you pull that together?
For small employers, we look at your wages for the year, whatever it is you declare. Now that, there's some various different components that go into your wages. So I could probably wax lyrical for an hour on what goes into wages, but it's up on the website if you do have any concerns, especially for those of you that have things like car allowances and etc. So, but essentially it's your wages that you would declare multiplied by your industry classification code. So you'll hear us talk about WIC. You probably in your dealings with Trevor hear him talk about WICs. That's essentially just the code that we give for your business activity. So that has a rate applied to it. That rate has the potential to change each year. As I said, we're holding that rate for the 2021 period. That rate is based on the way the scheme performs in your particular industry. It's why we look at it every year. So that rate will just be multiplied by your wages. It'll give you what we call your average performance premium. Used to be called your base tariff premium. And that is essentially then just your premium. There's some levies that will add to that around dust diseases, et cetera, and then there's also some incentives that we can give around and some deductions that we make around employer safety and things like that. They're all standard for employers such as yourselves, and essentially that's your premium. It's as simple as that. So the only reason it will change, assuming we have your classification correct at the start of the policy period, is if your wages go up or down, and that's why we just ask for your actual wage deck. To that end, you only really need to let us know if you think it's going to make a significant difference. So, for example, you buy a new business that you're going to roll into yours, or you divest, I guess, some of your current business. They're the only real times. Otherwise, most of it you could probably pick up on adjustment. Again, you've got any concerns or you just want to understand what it means, just give us a call. But for that, it's as simple as that. It's wages multiplied by your industry classification, plus or minus a few levies, etc.
If they hire somebody or there's pay increase during that period of time, is it worthwhile ringing up icare and adjusting your wages?
Look, I would say no. Not if it's just a single employee or unless it's an exceptional pay rise. No, I would say no, there's no real need. It's only, as I said, if it was substantial, as I said, you bought a new site, you put on a number of extra employees. There is probably a degree of consideration for you in that as well, because you'll understand your business, you'll understand whether that does make a significant impact to your current wage bill. But for the most cases, I would say no, just manage it on adjustment.
So I suppose the way we probably can look at it, Pete, and correct me if I'm wrong, if you're a really small business, so let's say you're a car repair workshop and you've got five team members and you employ a sixth team member, that additional wage could actually have quite a significant impact on the overall wage. So in circumstances like that, you may want to make that adjustment straight away. But if you're a slightly bigger organisation where you've got 30 or more employees, as an example, that impact won't be as significant. Is that correct?
Yeah, that's correct. Absolutely.
So if you've already paid your premium in full, but the actual wages for 2021 is looking to be a lot less, how does that adjustment get done?
If it's a bit of a hint, if it's about COVID, then yeah, we'll definitely look at it for sure. So again, there'd be a couple of questions we'd probably want to ask just to get into the details, but in general, if you called us, we'd have that conversation with you.
So Donna's asked us, the rate's on hold. What's the expectation around that rate possibly changing into the future?
So generally, we'll look at the wages each financial year. Sorry, not the wages, the industry code each financial year. So there's a lot of work that goes in behind the scenes with our actuaries, etc., around how the scheme's performing, how individual industries are performing, etc. So generally, it'll happen once every financial year. If it happens at all, as I said, up until 2 years ago, they hadn't changed for a number of years. They've been maintained for a number of years. We've had a couple of slight increases over the last couple of years, and then as I said, we're holding them for this year. And it doesn't always mean that every rate will change either. We look at each rate individually, but generally each financial year.
How does apprentice wages work into the premium calculation? So
when you give us your information, there is actually a specific bit that calls out your apprentice wages. I'll also call out that it's only for approved apprentice codes. I'll use the term code. Traineeships aren't included. It's around apprentices, and essentially we'll give you a discount based on the wages for that apprentice. So when I say discount on the premium, what it does is it takes the wages paid to that attributable to that apprentice or apprentices if you've got more than one, works out what the average performance premium is by applying it against the WIC, and we'll make the reduction against the premium.
Okay.
And it's as simple as that. So it's important, it is absolutely important that when you're checking your details that you look at things like your apprentices, even contractors if you use contractors, etc., because they are all treated a little bit differently.
Thanks, Pete. And I suppose one of the more recent changes to the declaration of actual wages forms is that you do ask now for that apprentice training course code, which is the national curriculum code for apprenticeship training. So it's important, make sure you're in touch with your training providers to make sure you've got the right code so that can be confirmed in your declaration.
So an employee's normal earnings were less than $750 per week prior to JobKeeper. Do employers use the normal wage prior to JobKeeper in calculating wages for workers' compensation? I'm assuming he's working the same hours. He's not working more hours in this case. Then you just declare what the normal wages were. It's only if they're doing more hours though, I'll call this out. If they're doing more hours to make up that 750, then you would declare the full 750. It will depend as far as how long the refunds take to be paid back after adjustments. It will depend on a number of things: the time of year, the amount, and to be perfectly honest, whether there's anything else owing on the premium. But generally, for the majority of refunds now, we've just made a system enhancement that most of them should go through reasonably quickly and automatically after we've processed. I will call out the difference between you've submitted your wage deck and we've processed it. But for the majority of refunds now, up to a certain limit, most of them will happen more or less as soon as we've processed the hindsight adjustment. So allow a little bit of time for, if it's a Friday, you might take over the weekend and a little bit more of the normal banking rules would apply. But generally, most of those happen automatically these days.
So just a couple of things, I suppose, from an MTC perspective. Some of you may have already seen our collaborative In Motion publication. This is something that we put out regularly, sharing as a mechanism to share insights and information about work health and safety, return to work and workers' compensation. We've done a couple so far that you might have seen. The most recent one in May was on mental health. And prior to that, we did a couple of toolkits for COVID-19 issues. This publication that's being done for June is very topical. It actually talks to the renewal process, but also includes a fair bit more of information and links around premiums and calculations and the processes around there. So please look out for it. It should come out towards the end of June. Our website is motortradescare.com.au. So please jump on and check us out and make contact if you need our help.
As Trevor said, the icare website and is probably the first port of call for most questions that you'll have. You'll get all the information there. And then if you need to update your details or you need a little bit more assistance, by all means, just call on 13 44 22. But thanks to Mark and Trevor for involving us today. It's been great.
Thank you, Peter and Trevor. From the MTA, thank you to everybody that's joined us today and participating. Very much, hopefully that it's assisted you all today. And again, obviously the feedback is important to us because this is very important to us going forward. So thank you to the presenters as well.